Me, it's become a much shorter term trading environment, right? So when these stocks, and again, I'm mostly stocks, a little crypto, but there's more opportunities for me in the stock market and commodities. When things are falling sharply, I still play bounces off technical support, but in a bear market, you can't look for too much. Otherwise, you get honestly crushed. And so for me, it's smaller share size because again, there is higher risk in this environment versus you have bull markets where it's just up, 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 up. This is not a lot of risk. Bear markets, crazy bounces, but also crazy drops.
Right.
So it's shorter time frames, quicker trades, and then also smaller share size, smaller coin size, smaller investment size. And you just got to kind of be defensive. I mean, there's still money to be made, but you got to be more careful. A lot of people out there that are probably watching this, if you don't know how to read charts, you got to be real careful because you just can't close your eyes and pick a level and say, "Oh, I hope it bounces here," because you can get crushed.
Big time.
So learning is super important.
Yeah.
Saying, if you don't mind me jumping in, is like also it's important to understand that the chart. I mean, assuming you saw the breakout on XRP, there was a beautiful like wedge pattern there. But at the same time, it's on speculation that the judge's decision may come in the right way. But remember, if you're holding into that decision, you're gambling, right? You don't know what one individual judge is going to ultimately decide. So it's crazy to just leave it all on the table and say, I'm going to close my eyes and just pray. What you did is perfect. You're taking profits. I mean, it's one thing to leave a little bit on the table just in case, but it's crazy to just leave it all out there. One of the things that is important to recognize is that, people talk about, when Volcker was around, it went from 12 to 18% and stuff, but you have to look at it in terms of percentages, right? How violent and disruptive is it? And it's much more to go from 0.3% to 4%. Think about how many hundreds of percentage points that is, or 12 to 18 is 50%. So it's a matter of what the market was used to, and the market was used to free money, and all of a sudden it's gotten expensive very quickly, and it's a shock, and potentially a worse shock than in the 80s because of how dramatic a percentage move it has been. What's interesting about the bond market and the stock market and the crypto market is all at the same time you saw these crazy things going on, whether it was Dogecoin or SHIB or in the stock market AMC and GameStop and what was going on there, just like the crazy flood of this money. You could almost see it in the bond market too how many places had negative interest rates, right, at one point. And I mean, just think about that. You are losing money when you loan it. Like that. It just boggles your mind. Like, why would you even do that if that's the case? But people were doing that, and it's one more of those signals that just before the turn, right? Just the craziness of situations like this is a kind of an interesting term there because we're in a bear market, obviously. But I think obviously, if you're in crypto or you're looking to get in crypto, you have to go to the safe ones right now. You have to look at Bitcoin and Ethereum. That's where whichever one survive what we're going through, whether it's a winter or an extended winter, it's going to be probably those two for sure. I still think they both have a little bit more downside to go before they bottom. In stocks, I still think there's more downside there too, so it makes it really tough to call out any names. But I think you go towards, I still think Apple's ridiculously expensive at its valuation. I just think there's been a lot of institutional money and mutual fund money. I mean, everyone was just buying that stock because it was the safest, kind of best quality name, and so all this money has flooded in, and I still think it has to come out. If you look at valuations on Apple, it's still kind of expensive. I mean, I remember the days when PE ratios for a slow-growing company like Apple were 10 or 8, and I think Apple's still in the mid-20s. And I understand it's a great company, but at the same time, there's a lot of great companies in history, and they still have valuations in that 10-ish range. I don't know how you feel about gold, but that is one place I'm holding. Yes. I'm holding in and kind of being careful in. And again, what I love to point out to people is, people look at gold in terms of dollars, and gold is down for the year on dollars. But you have to keep in mind, if you were in it in euros or pound or yen, you're doing pretty well actually.
Yeah.
Exactly.
Especially comparatively to the S&P or Bitcoin, which are down tremendously on the year. And then the one thing I always like to say is that the dollar's up 20% on the year approximately, and gold, I think at the low, was only down about 7%. And remember that, if you're trading something in terms of dollars, technically gold should have been down 20, right? If it's up 20, it should be down 20. So if something's not down as much as it should be, what is that telling you? It's telling you smart money's buying it. And so again, to me, it's all about watching where that accumulation is going on. And I do think whenever the Fed pivots, that's where you start to get that bigger pop in gold.
Right.
I think for the most part, I'm on the same wavelength. I think crypto still has another year to go before it fully bottoms, and then I'm not sure how quickly it'll start that next bull market. I actually think the next bull market will be a lower high from this last one. So I think people are going to expect this monster move up where it takes out 69,000. My guess is it probably gets back to like the 50s, and then you'll have another wave of selling pressure in there. And it wouldn't be surprising if it creates kind of this like this wedge pattern in the charts, and then eventually down the line I think it does break out, and it has a monster breakout, 100,000+ easily. But I still think you have to keep in mind that this bear market should be the longest bear market. I know everyone's like super focused on 4-year bear market, usually 12 to 18 months, but remember, every past 4-year bear market the Fed's been printing money, so now they're not. So now you have to say to yourself, okay, does that impact when Bitcoin starts to rally again? And the answer probably is yes. So those type of factors are involved. Like Florian, I agree that initially the Fed's going to not want to lower interest rates and go back to printing of money because they've kind of been stung here, right? They were like transitory. No, that was wrong. Now it's like crazy inflation. It will come down. I think 4% or so is where we're headed, but I don't think it's going sub 2%, which means that they're okay with a recession, but they're not going to be okay with a depression, right? So, they'll tolerate 5% unemployment in the U.S., but I think at like 8 to 10, they're going to be like, all right, well, what's the bigger evil here? Is it 4% inflation, or is it, 1 out of every 10 people can't find a job and struggling? And they're going to say, all right, well, now we have to print again, right? And so that's going to be that big pivot for Bitcoin, I think. I think the stock market, the Fed, pulled forward so much of the upside that we're now in much of a type of consolidation pattern for 5 to 10 years. Like, I don't expect new highs in the stock market for like 5-10 years. If you look at the Chinese market, the Brazilian market, they all topped out in 2003 from a monster move, almost very similar to what we've seen, and they have not made new highs since then. So you're talking almost 20 years of sideways chop with big, inside of inside of not making new highs, there's been huge moves, but we haven't taken out those highs. And so I think you have to say to yourself, did the Fed pull forward so much of the upside, and now we just have to digest all of it, and it's going to be a long trek? So I don't want to scare anyone. I think like investing at lows with good quality names for these like medium cycles will be very profitable, but the long-term investor is going to have a lot of trouble. And let's be honest, the long-term investor has rocked it for so many years, it's almost due for like a little tougher time. And then I have for stock trading, inthemoneystocks.com. Crypto trading is verifiedinvestingcrypto.com. And then I've just launched an awesome educational product, basically 3-course series, every knowledge that I've accumulated for 20 years. You guys can learn every mistake that I made and hopefully not make it yourself. I think that's the goal here. But all my knowledge is in this course, about 20 hours of content there. So it's really a mind-blowing thing, and it's been a pleasure to put it out there for everyone.